We are in Los Angeles, and we have some news this morning. Pershing Square announcing it has agreed to invest $900 million to acquire 9 million newly issued shares of Howard Hughes Holdings. Joining us live from Los Angeles is Pershing Square's CEO, Bill Ackman. You're in town for the Milken Institute Global Forum.
Yeah, I'd say for Mike, he puts on an incredible conference.
And you just came back from Omaha from the Berkshire Hathaway annual meeting, so I want to talk about that as well. But this is big news because this is something that has been in the offing now for several months. You have raised your offer and your stake now. Tell us what's happened and how did we actually get here?
So I think it's been in the offing for maybe 30 years, actually. What I mean to say is, I came into this business. First book I read was Ben Graham's Intelligent Investor. The next thing I read was basically the Berkshire Hathaway shareholder letters. And it tells, the story of Buffett buying control of a textile company and transforming it into a very valuable business over a long period of time. And, Buffett's been one of my most important heroes, certainly in business, and I would say in life. And I always sort of aspired to build a diversified holding company and turn it into, valuable enterprise and have big shareholder meetings and all that kind of thing. So I've been working on this for a really long time. Now, this specific transaction, started actually, again, a long time ago. We bought 25% of a shopping mall company called General Growth before it filed for Chapter 11. I joined the board. And part of the way to make that company valuable was spinning off all the ancillary assets into a company called Howard Hughes. And then that's now 14 years later. And that business it started with a jumble of assets. And over time, the then management team and most recently David O'Reilly and team have transformed it into a great business, but a business that has really gone unrecognized, I would say, by Wall Street. And it's always struck us that it would be there was a cover story in Forbes saying that it was going to turn into the next Berkshire Hathaway. That was a decade ago.
Well, so the question, though, is, so you're now going to have almost a controlling stake.
Correct.
Almost.
Correct.
It's a little bit actually like Warren Buffett, almost a controlling stake.
Correct.
The question is, when is it going to produce enough cash, like a Berkshire, effectively, that you can then take that cash and go invest it?
So first of all, the MPC business, let's just back up. Howard Hughes owns these sort of small cities. They're called master plan communities, but they're not small. Like, so for example, we own the Woodlands, which is about the size of Manhattan, right? We own Summerlin, which is a major, 28,000 acre small city in Las Vegas, populations of like 130, 150,000 people. And what we do is we own all the land. We sell lots to home builders. Home builders build homes, people move in. And then the company over time builds the amenities, builds the community. I call it a bit like SimCity, but in real life. And eventually we build high-rise office buildings and apartment buildings. And it's a great business, but it consumes a lot of capital because you have to keep building the cities. Now, the cities at a certain point in time get to a level of maturity where they start actually throwing off cash. And that's really where we are with Howard Hughes today. But there's still lots of opportunities to reinvest the cash in the city. So Howard Hughes, as a real estate company today, is not going to throw off a lot of cash, to your point. But 5 years from now, 10 years from now, it's going to produce more cash that it can generate.
Explain how Pershing Square is going to be attached to this.
Sure.
What your role will be, your CIO's role is now going to be effectively involved in this, how you're going to get compensated.
Sure. So first of all, the $900 million is not coming from the Pershing Square funds. It's coming from the Pershing Square management company I own about 45% of it. The rest of the team owns about 45%, and 10% is owned by a group of investors. We sold a piece of the business almost a year ago. That's the $900 million of capital that's kind of going into the business. So it's really the new additions to the executive leadership team that is investing the capital. So it's great alignment. You hire a new executive chair, you hire a CIO. It's nice to hear that they're investing, $900 million when they take the seat. We're not getting any option or stock or actually personally any compensation from the company. The company is getting the benefit not just of Ryan and myself, but I operate with a team. Unlike Mr. Buffett, who seems like a bit of a one-man band, and certainly he was when he started at Berkshire Hathaway. I've built a team over time, and we work as a real partnership. Howard Hughes today couldn't afford to hire the 40-odd Pershing Square team members, the 8 investment team members. So we're going to bring all the resources of Pershing Square to Howard Hughes, and we're going to charge we're going to get paid a $15 million fee, and we're going to get paid a incremental fee To the extent that the market cap of Howard Hughes grows at a rate in excess of inflation, we're going to get a 1.5% fee on the increase in market cap, basically above today's market cap. Let me finish for a second. And only if the market cap on a per share basis. So if we issue a bunch of stock to make an acquisition, that doesn't increase our fees. It actually reduces the fees as a percentage.
What kind of, you talked about issuing stock to buy stuff.
Yes.
Is that how you plan to buy stuff with the stock? Is there going to be enough cash? And would you ever try to buy, for example, an insurance company, which is something obviously
sure.
Berkshire's done?
So we're going to start with $900 million of capital at the holding company that is available to make investments. It is definitely on our, if you look at Berkshire over time, a big part, Buffett's known as a great investor in stocks and companies, but a huge enhancement to his returns over time is that he built a profitable insurance company that generated, as a result, free money, so-called, float. And he built that. The insurance company was embedded in a diversified holding company. And the benefit of putting an insurance company or building one inside a diversified holding company is that it gives you a lot more flexibility in what you can invest the insurance company's assets in. If you're a pure play insurer, you can't take that much risk. You basically buy fixed income securities. So that model has not gone unnoticed by us. I think it's highly likely that we will build or buy an insurance company.